What's up investors, it's the Russian dude. In today's short video let's talk about a very interesting approach, very different one, how the US government can help its battle against the inflation. Because as you can see right now, the rates were extremely high for an extended period of time, the inflation was slowly budging at first, then it was not budging at all. The most recent CPI report showed an increase in inflation once again, so it looks like that modern problems literally require modern solutions, because the old methods of fighting against modern inflation, well, it looks like, I'm not gonna say they're not working completely, but they are not as effective as they used to be. So, as a result of all this, some economists decided to come up with very innovative, very controversial, very questionable, but potentially working methods how they think the US government should proceed in their fight against the inflation. So let's talk about all this right now. And so yeah, just in the very basic understanding, the work of the Federal Reserve is to keep a very fragile balance between the inflation and the interest rates. Inflation is going up. They increase the interest rates, this reduces the economic activity, inflation goes down, and in order for the economy not to stall completely, they start reducing the interest rates. That's pretty much the entire work that the Federal Reserve is doing, at least their main responsibility. The reason for this is quite obvious. Whenever there is an environment of high interest rates, the economic activity goes down, people don't borrow that much money, businesses don't spend much money, borrowed capital especially, on research and development activities, so pretty much people and corporations, companies, businesses, enterprises, they just try to continue going at least in the same pace they are going right now. And so obviously whenever the inflation was at its most peak numbers of approximately 9% during the summer of 2022, whenever the high interest rates started showing the results of their work, the inflation dropped relatively significantly, almost approximately to 3% in July of 2023. But later on, since July of last year until the moment of recording this video, the progress has been extremely slow. The inflation was barely budging, and even though the Feds kept the rates high, it was not working as much before. This is a common phenomena. Whenever the inflation just starts, whenever the fight against the inflation just begins, it is relatively easy to shave off the inflation, but then the closer you get to your target, the harder it gets. And so, one of BlackRock representatives, Rick Rieder, he thinks about the innovative approach to fight against the inflation. What he basically says, just to sum it all up, and we're gonna go into details right now obviously, what he is saying is that, in fact, the inflation, in order to fight against it, the rates should be low, which is the completely opposite proposition from what the Feds used to do over the last 100+ years. Basically, these are the statements that he brings in support to his decision, in support to his proposal. First of all, he's mentioning that a lot of companies, especially technological IT companies, which are basically developing software and things like this, they earn a lot of money during whenever pandemic was closing everything, when people were working remotely, and these are precisely the companies which use a lot of borrowed capital. And because they made record profits during these times, they were not needing to put a lot of borrowed capital, they did not to borrow a lot of money from financial organizations, from the banks, they were able to cover all of their expenses with their record-breaking profits. Because of this, high interest rates were not affecting these companies that much, even though, theoretically, if you think about it, they should have. Another reason is the older generation, specifically baby boomers, who already at this stage of their lives already paid down most of their debts. Mortgages, car payments, just credit card bills. Not too many boomers, they have debts. For this reason, also high interest rates were not affecting them that much. Because of this, the economic activity of this group of people, which control trillions of dollars of the US economy, well, it did not slow down significantly. They continued to spend money on entertainment, medicine, going out, restaurants, buying things, because we have simple as that the high interest rates did not influence their purchasing decisions that much. And just for comparison, the total debt of baby boomers is estimated to be at $1.1 trillion, while the total debt of Gen X and Gen Z is approximately $3.8 trillion. So as you can see, these are the ones who are supposedly the economically active generation, but at the same time, obviously, the assets, the money, the savings, the income, the salaries that these generations have are nowhere near close to those of baby boomers. What do we have? Basically, baby boomers, which have a lot of money and not much debt. They continued spending their money like nothing happened. And those younger generations, my generation people, the generation that came after me, Gen Zs and everything, we don't have that much money as baby boomers, but at the same time we have a lot of debt. For us, yes, we have to take care, we have to be careful about spending money, we don't just swipe our credit cards left and right, because yes, at the same time, paying those debts will be very expensive for us. And yes, our generation also has much more debt, like mentioned previously, than those of baby boomers. As a result of all this just mentioned, according to once again Rick Rieder, he thinks that the Feds need to do completely the opposite thing in order to fight against the inflation. He is saying that the rates need to be actually lower in order for the inflation to continue going down. His assumption, and I'm just quoting him, you guys can agree with Mr. Rick Rieder or you can disagree with him, I'm just quoting his statements as they are. Whenever the interest rates will be reduced, this, according to him, for some reason is supposed to theoretically reduce the economic activity of baby boomers. Maybe simply they will just start saving money once again, not thinking that the inflation will eat their savings, so maybe that's the assumption right here. He also thinks that those companies which rely heavily on capital, on borrowed capital, they will once again be able to use a lot of this money, and the savings that these companies have, the extra profits, the massive profits they've been making in the past during the pandemic, will not be maybe as significant, as severe as they used to be. Long story short, according to this BlackRock representative, he's basically mentioning that the decrease in interest rates will reduce the economic activity of these parts of the society and these corporations which spend a lot of money. So basically, by targeting a specific group of people and specific type of industries, this is what potentially might reduce the circulation numbers of money in the open markets. Money will not be going left and right, people will not be spending that much money. Once again, baby boomers, the ones who spent the most, I would say, in the US economy in terms of percentages of their savings. And well, once again, Rick Rieder mentions this is his innovative approach, that in order to fight against the inflation, you need to reduce the interest rates. Completely the opposite what Economics 101 tells us. Very controversial proposition in my idea, in my understanding, but I'm curious to hear what you guys think. Let me know if you agree with this guy or not. Thanks so much for watching. If this was interesting, please like this video, subscribe to my channel, and see you tomorrow.
We won't succumb to their tricks, the facade they try to sell. Their twisted words and feeble claims on us all they cannot quell. We see through their lies, their feeble attempts to sway. We do not believe